Okay, in this video, we're going to be talking about what an A plus setup looks like to me. What is my criteria for an A plus setup? Okay, so a lot of us trade different strategies, right? So I can't tell you what yours is. I can just tell you what mine is, and I can tell you what the criteria is for an A plus setup for me, right? So first things first, we need to start on the larger time frame. So we're on a daily chart here, GBP CHF. The date is 3/3/2023. So we have a daily chart, right? It's important that we are trading with the higher time frame market structure. Okay, now I'm not going to go too deep into market structure in this video. I have an entire playlist, an entire series on market structure. If you just search my YouTube channel, search market, or go to my my playlist section on my channel, and you'll see my entire series on market structure. I have several videos on market structure in there. Everything you need to know about market structure is in that series, right? So daily time frame, we need to be trading with the overall market structure. This is 100% confirmed bullish market structure on this daily chart, right? When did it make that switch and when was it confirmed? Well, look at my cursor. I want you to follow my cursor here. So see how we were trading lower, we were trading lower, we were trading lower, we bounced, and then boom, we get a nice big explosive move to the upside. This was where we had that shift in market structure. Look at my cursor, big explosive move. It broke a swing high level right here. Once we broke that swing high level, that was a shift in market structure, but it's not 100% confirmed yet. We need something else to occur before we really mark this off as 100% confirmed market structure to the upside, right? What do we need next? We need a swing low level put in after that shift in market structure. So we got the shift, boom. All right, now we got a swing low level that we need to get put in right here. What's a swing low? When a swing low is simply when you got your lowest low in the middle, and you got two higher lows on the left and the right. So we see how this candle right here, this is your lowest low, and then on the left you have a higher low, and then on the right you have a higher low. That's a swing low. So after we get a shift, then we get a swing low. Market structure at that point is bullish. It's confirmed. 100% bullish. We're trading with the overall trend. Okay, that's number one. Number one, for something to be an A plus setup, we have to ensure that we are trading with the overall trend. We want to be trading with the trend. We want to be trading with the market structure. Okay. Next, we need a higher time frame level. Okay, we need a higher. This is very important. We need a higher time frame level. We have a higher time frame level right here. This is a daily bullish order block. Okay, so far what have we concluded? Well, the daily chart is bullish, so we're only looking for buys. Market structure is 100% bullish. We have a larger time frame level here. Oh, and also one more thing, price traded down into a discount. That's ideal as well. Okay, you want that as well. You want price to trade down into a discount. So from this low to this high, measure that price range below 50% equilibrium. You want that pullback in that test of a larger time frame level below in a discount marketplace. We had it. We had a test of a larger time frame level on the daily chart. So that checks off the list. All right, let's go down to, we even had a 4-hour larger time frame level as well. But okay, so now we're on our intraday time frames. Okay, we just analyzed the daily chart. What do we want on the intraday time frame now? Well, we want to shift in market structure, and we had it right here. But do we have that fair value gap on the shift in market structure? We don't on the 4-hour chart, but that's when we go to utilize different time frames, right? But also it's worth noting that we have another larger time frame level here. So we had that original bounce off this daily bullish order block, but remember, price is fractal, and once we had that bounce off that larger time frame level, we had another level in here. This is a 4-hour bullish order block that was created after we had that hard rejection off that level. So we have another higher time frame level, because I consider 4-hour and up higher time frame levels. So we had a daily higher time frame level, but we also had a 4-hour higher time frame level right here as well. But we still need that shift in market structure with a fair value gap confirmation. And if we go to our 1-hour chart, you can see we had it. This is what you want next. You want a reaction off the higher time frame level. That's key. Okay, I don't just buy something as soon as it trades down into a higher time frame level looking for higher prices. No, I want to see a reaction first. This reaction, I want you to think of it like smart money is leaving their footprint. Okay, you're letting smart money show their hands first before you put on anything. Let them show their hands. This is them showing their hands. This big explosive move up during London was them showing their hands off of that higher time frame level. And remember, we're trading with the higher time frame trend. We're trading with the higher time frame market structure. We traded down into a discount marketplace. We're bouncing off of a higher time frame level of support. And this is that next part of the equation, which is our shift in market structure. Okay, right here, big impulsive move to the upside, which broke this high. And it left, this is key, it left our fair value gap confirmation. You need that fair value gap confirmation, okay? That comes with high probability market structure shifts. The fair value gap, let me repeat it in case you missed it. That fair value gap is needed for a high probability market structure shift. We came down, we grabbed this liquidity, we tested a higher time frame level, boom, big move to the upside. Big, strong, explosive move to the upside, leaving a fair value gap on the shift in market structure, off of the higher time frame level of support. Okay, next, what do we want? Well, we don't want to just chase prices as trading up into something like this. We want it to trade down into a discount and even give, for it to be an A+ setup, 61% retracement. So let's draw Fibonacci on here. Let's take this low to this high. See how price then traded below 50% equilibrium of that price range. At that point, we are in a discount marketplace. I only want to be buying in a discount. I do not want to be buying in a premium marketplace, because premium simply means expensive. Discount simply means cheap. We don't want to buy something when it's expensive, right? We want to buy something when it's cheap, when it's at a bargain price. And it's at a bargain price as soon as it trades down below 50% equilibrium, okay? That's what we need. We're patient. We wait for that retracement. It does it. It completely rebalances this portion of price action. Now, before I get the question, does it need to completely rebalance the fair value gap every time? No, it doesn't. It just did it in this scenario. But you do need it in a discount marketplace, okay? It's not always going to fill the fair value gap completely on the first try. Sometimes it'll tap into it, or many times it'll tap into it, partially fill it, and rip to the upside. All you need is a discount. You need it in a discount marketplace. We got it. We even got 61% key Fibonacci retracement as well, which is ideal because we want to minimize risk as much as we can, right? So we got that as well. And this shift, now it's also key is like where that shift in market structure happens. So I want you to pay really close attention to this, because this is one of those things that kind of tripped me up when I first started with SMC, when I first started in Forex. But where you have that shift in market structure is key as well. So for example, this morning on GBP CHF, we had that shift in market structure during London session, and it's always best. There is a night and day difference in my results when I have London session backing me. So see how we had this move was during London session. This shift in market structure was during London session. And then we got that pullback coming into New York kill zone. It's best if you always have London, you're trading with the London trend. The London trend was bullish. Okay, sure, we've been trending lower here for a while, but this morning, this London trend was 100% bullish. It was really strong shift in market structure. And then all we were doing this morning was piggybacking that momentum coming into New York kill zone. That's all we were doing, is piggybacking that momentum. That's always best. You always want to have London trend in your favor. Okay, now let me look for an example of like what wouldn't be a market structure shift, because again, it needs to be during a key time period. Otherwise, you just get caught in stop runs all the time, and it can get really frustrating. So for example, all right, here's a really good example. So right here, I want you to look at my cursor, look to the left of this chart. See how we have a swing high level right here? If you look at my cursor, some people may see this, it curled up, and then it had a really strong move through that level right there. Some people might think, we're good now, right? Now we just wait for a pullback into a discount market to get in, and then we would ride that trend up higher, right? And look what ended up happening. You got taken out, right? It attacked those sell stops. That's what we call a stop run. And this is one of those things that got me a lot back in the day, because I would see something like this, and sometimes it still does if I don't wait for the best setup, sometimes it'll still get me. But this was during New York session. It was during later in New York session. But I also want you to note that London session was bearish. The trend was already set during London session for the day. The bears got control. Bears got the upper hand. They've already set the tone for the day. Think of London session like that. London session sets the tone for the day. Bears got control, and then we had this move right here, this strong move breaking this high. That was a fake out. That was, I mean, if you were a bull, you bought that hook, line, and sinker, and you thought that was that shift in market structure because you're thinking, hey, we left a fair value gap, right? That is a fair value gap. We broke this high, right? That is a high. And we did pull back into a discount later on during London session the next day. So I would get in at a discount and ride that up, right? It didn't happen during a key time. You want the influence of London session. That's best. That is a stop run. That is a real shift in market structure. Okay? I want you to compare those two examples. Stop run. Market structure shift off of a higher time frame level. Big difference. You want the influence of London session. So, and then it pulled back, like I said, it pulled back into a discount. And next thing you want an institutional price level in there. So institutional price levels consist of the 0, the 20, the 50, and the 80. Those are your institutional price levels. Again, 0, 20, 50, 80. In this example, we have the 50 institutional price level in here. So we had that. It pulled back, filled in that fair value gap, pulled back to a discount, tested our 50 institutional price level, and then found support. So that is what that's the criteria for me for a setup. One last time, we want to be trading with the overall trend. That's very important. The overall trend meaning we want to be trading with the market structure. We want to be trading with the daily market structure. If the daily market structure is bullish, I want to be buying. If it's bearish, I want to be selling, right? We want a reaction off of a higher time frame level. And when I say reaction, all I mean is a shift in market structure, a high probability shift in market structure off of a higher time frame level. Okay, so higher time frames, what are those? I consider them 4 hour and up. So your 4 hour, daily, weekly, monthly. 4 hour and up are your higher time frame levels. You look for reactions off of those levels. Okay, once you get a reaction, you want it preferably during London session, because London session sets the tone for the day. Then coming into New York kill zone, I want a retracement, because that's what we're doing during New York kill zone. We're looking for retracements to simply piggyback that move that was set during London session down into a discount market. Remember, we need to be buying in a discount marketplace below 50% equilibrium. We want that fair value gap confirmation on the shift during London as well. There's your fair value gap. I have videos on that on my YouTube as well. Just search fair value gap, you'll see them. We want fair value gap confirmation. We want that retracement and institutional price level in there as well. We want that. And I think that is about it. I think that's about everything. You know, for me, New York kill zone my trades have to be within a New York kill zone. The ICT New York kill zone is 7 to 10 a.m. Eastern time. I push it to 11 because I still get some pretty nice trades within that 10 to 11 range. But yeah, 7 to 11 a.m. Eastern time is my time to trade. If I don't get a trade within that very specific time period, there's no trade for me. It has to be within that time period or it's not my trade. Okay. So yep, that is a A+ setup for me.